Consumer duty, one of the elements of this is around a rounded service. We within Air Group are currently looking at our plans for 2023 and linking in with the consumer duty drivers. One of the things that we're looking at is from our 8,500 membership base, 2,000 are actively advising on equity release. That means 75% aren't. If we take out the advisors who have retired or passed on or moved totally into completely different career choices, we've still got a substantial number, many thousands of advisors who could and should be referring. Now, financial services across the whole sphere, post-consumer duty, will need to properly evidence that they are either advising in a product area or referring in that product area. And it is critical that they define which route. So going back to Les's T-junction, left or right, there are only those two turning options. So it's important that we look at referral opportunities. And although many of you take referrals at the moment, our next speaker is going to give you an insight into the opportunities that sit, some ideas that you might not be aware of that you might then learn and pick up from. But the referral market, one of my predictions today, is going to boom in the next couple of years. It's really a growth opportunity for all of you as businesses that I know many of you are already tapping into at a certain level, but I think many more introducers will come online and many more will be looking for good quality professional advice to facilitate for their customer outcomes. So without further ado, I'm delighted to welcome our next speaker, somebody who I've worked with in the last 4 or 5 years on a regular basis. He's well known in the industry, so probably doesn't need too many introductions. But Jason Ruse, please come and join us.
Good morning, everyone. It's good to see you all. It's good to see people again, isn't it? When we had COVID, you just saw people through screens, and then like about 6 months later, you met them face to face, and you realised that they actually were about 7'1", and you thought they were about 4'4". You know, but now, and I was nervous about going out and presenting again, actually, because I actually thought I could only present if someone had a screen round them, because, you know, that's all I was used to seeing, really. So it's really good to see you all today, and I'm really happy to be here. So that's a picture of me pre-COVID, before I became best friends with a fridge. So as you can see today from looking at me, that sadly I don't quite look like that anymore, actually. And I've lost the front tooth as well in the melly as well since then. So that's not cheap either, but I'll bore you with that over lunch if you like. So I'm Jason Ruse. So one of my roles at Key is that I am responsible for our referral business. I'm also responsible for about 3 or 4 other parts of the business as well, but welcome to private equity. So, you know, on that basis, you know, I get to see a lot of people who are looking at how they can help their customers, how they can help their clients in different scenarios, a whole host of different scenarios. And, you know, this market has really grown for us. I mean, when I came into Key in 2016, I've been in financial services 34 years. I was a child when I started. But when I came in 2016, you know, we used to get about 150 referrals a month for our referral business. And now we get about 450 to 500 a month. You know, so there's a massive opportunity for you guys here who actually write equity release yourself. You know, and we'll cover some of the areas that we see the business growing in our business, and I'm sure that's growing in your business as well. And hopefully that'll give you some ideas and some food for thought. You know, because the cost of acquisition of equity release to actually, you know, through Google and through SEOs, all the things that I'm really unfamiliar with, is really growing and really expensive. I talked to our head of digital and the price keeps going up. So if you can generate leads that, I guess, for use of a better phrase, they're not free because you're going to probably pay a referral fee, or you might not. Especially if you're in the wealth environment, you might not pay a referral fee. So, you know, is there ways that you can drive more clients to you to actually assist them at this time? I won't cover this in much detail because Les, better known now as The Economist, he covered that very well in his slot. But if you look at the recent AKG report, you know, looking at later life lending, you know, first time ever it's really been priced and said this is what the market actually looks like. You know, how many mortgages are going into retirement, how much equity release. how much is being done on RIOs and TOs. So it's 150 billion, but let's remember what the estimates are for what the later life market actually looks like. Unencumbered property wealth for the over 55s, depends on what report you read, but sits somewhere around £1 trillion. Now that's a much bigger number. My calculator from school doesn't do 1 trillion anymore, but that's a much bigger number than 150 billion. But the ER market is still quite small at 6 billion. 6 billion this year, so actually, how can we help more consumers? Because for me, that's the challenge. How do we help more customers actually either help themselves, which probably a lot more are doing now because of what's going on with the cost of living challenge, or how do we help them help their nearest and dearest? And what's quite interesting is every sort of year we do introduce a report. So we go out to all our introducers. Now we've got around 10,000 introducers, okay? Sadly, not all active, or I'd be probably one of the stars of Key Group, but sadly not all active. But a lot of people who are looking at the market, who have either transacted with us previously or, are actually active, but for some reason don't necessarily want to write it themselves. And we see that. We see a whole host of different reasons, and I'll cover some of that. But we know that 37% of introducers said by offering ER, they could help people that they'd not been able to support in the past. And I think that's massive, to be honest. And if you think about, slightly going off tangent, but if you think about RDR, so who remembers RDR? I remember RDR really well. So that drove people down different paths. So what generally happened is people became probably a specialist in their sector, so they were like the hub, and then they had spoke arrangements that they pushed out for different things, tax consultants or IHT consultants, whatever it was, to enable them to actually, transact and control the actual relationship with the client, but have specialists to help with that. And and that model has grown, and that's why our model as a referral business has grown. And I'm sure that's why your businesses, when you're getting referrals, is growing. So again, this research is currently being done. It's not completed. So we're just giving you a bit of a snapshot of where it is currently, where we've got to today. So you can see here that probably no surprise for anyone in this room, but our biggest cohort are mortgage brokers. So they're either unable to help clients who are older because of the fact that they maybe had a bump in the road, they may have had a business that's gone south, so they are unable to help that customer. Or it might be because they want to purchase a property. I still go and present, I'm sure you all see this in your conversations that you have with clients. So many people don't realise you can still use equity release for property purchase. Every week I present at different events, people go, can't use that for property purchase? And you go, well, yeah, actually you can. And they're like, oh, didn't know that. And obviously the bank of mum and dad, and increasingly now, BONAG, the bank of nan and granddad, as I've affectionately called. So again, another big area for us is in the mortgage broker arena. We are starting to see though now, is more in the wealth management arena. So I've been presenting this week, last week and next week to wealth managers. And they're actually now starting to sit up and actually think, equity release actually could really help my client. And the conversation I've been having with them is that because property wealth doesn't sit on a platform, that's probably why you're not considering it. And actually, property wealth for most people is probably going to be their biggest asset. I know some people have got some really big defined contribution schemes or, other big investment bonds or whatever, but actually property wealth is probably their biggest asset. And actually, is that a better use than using your pension because of the IHT breaks on your pension? Are you better to use property wealth instead of that? So that's why we're starting to see a growth in the wealth. And the interesting thing with the wealth management customers, in Key, our average case size is about 100 grand. And you can see that on our market monitor. In our referral business, the average case size is 133,000. And what you see is in the wealth arena, that average case size goes to about 150,000. Now, what's really interesting is that that's doubled since 2018. That's doubled since 2018. Now, you might be sitting in the room thinking, is that because people are taking higher LTVs? Well, in Key, our average LTV is only initial LTV is only 26%. So no, it's not. That's all driven by property growth. So is now a good conversation to have with a wealth advisor around, you've had all that growth on your property, or your clients have, are they better to take money out of that rather than their investments right now? Because what's happening now with their investments? I know the conversation I had with my advisor recently is it's down by about 11%. So if you take money out when the market's going down, that's called pound cost savaging. So you're better to look at, can property wealth be factored into that conversation? But we also see referrals from estate agents. So there's a whole ream of areas that we get business from. And these are people that are going to be in your high street. You know, these are people that you're going to know. You know, look around the room, you know, everyone is generally of a certain age. So they've probably got some really good connections from previous careers and previous life. So we're seeing all these areas really growing their businesses. Why do people refer? So the document we sent out recently to people to get feedback from them was they look for partners because clients started to ask them, I've heard about this, I've seen the advert on telly, you know, I've seen the Key advert or I've seen the Age advert. You know, what does this actually really look like? So they wanted to look for partners. Some of the intermediaries that we deal with is that they wanted a specialist. It's not their market. They may have the equity release exam, but they actually don't want to provide advice on it because it's not an area that they're comfortable with. Or they're happy to do sort of normal cases, but if anything's a bit more complex, they'd rather hand it off to a specialist. So that's, you know, another area that we see the market. And then the other thing is that some of the intermediary network relationships actually don't like equity release or make it really difficult for their advisors to do equity release. So consequently, we get referrals from those areas. And, you know, as the ER impressions from what they would send us from what their clients are saying is, you know, just over 26% responses to understand more about equity release. You know, 18% were interested, keen to learn more. But there were still positive and negative reactions to equity release as well. But actually, from a negative perspective only 3%. Now, that's changed over the years. I remember when we did this previously, that number was much higher. So I think the normalisation of the market, you know, respected brands coming in like Standard Life and, you know, household names like Nationwide. I'm not saying you should get your equity release from Nationwide, but the fact that Nationwide is the biggest building society, it's on the high street, it's a mutual, you know, I think that gives people comfort around actually looking at this market now. And why do people refer? You know, so 51% is because interest came from the customer. You know, so they thought, well, you know, this is a market I need to be involved in. You know, and customers are more likely to speak about ER. You know, because of the adverts on telly, because of the raised profile that, you know, has been coming through the market. Even Martin Lewis says now, if you can't downsize, maybe equity release is something you could consider. You know, if you go back a few years, Martin Lewis wasn't saying, and we all know that everyone trusts Martin Lewis more than anyone else. You know, it's a well-known fact. Everyone trusts Martin Lewis. But then you've got those introducers who don't refer, you know, so they currently, you know, for whatever reason, they don't want to refer. But if there were a need from their client or there was a partner they wanted to look at, then they would consider referring. So it is about, you know, making people aware of the service. And I think one of the other reasons people are not involved in this market is because their clients don't know they're in this market, even if they're not advising themselves. If I told you the amount of websites I look at of advisory businesses who have nothing on there about later life lending, and then when we see them at events, they go, we don't actually ever get any inquiries for this. And I say, that's interesting. Does your website say anything about you can help with later life? And they go, no. I'm going, well, that's probably why you don't get any inquiries then. You know, so working with us at Key Partnerships, you know, we provide a lot of marketing collateral, you know, a lot of stuff that only just needs logos on. So we try and make it as simple as possible for people, as I'm sure you do with your relationships. And I think, you know, with consumer duty coming over the horizon, luckily we've got experts on that and I'm not one of them, but consumer duty is coming. You know, you've got to have your plans and, you know, a lot of what you're going to be looking at work streams by the end of October. So that's the first bit. And I think that was kind the FCA, because they said originally by end of April, I think it was, Charlotte, that everyone had to be, but they've now pushed out to the end of July. Thanks, regulator. It's given us a lot more time. Apparently going to cost the industry about 200 million. So, you know, that's an expense that we can't. But this is what the research said from what we asked on the questionnaire. So a lot of people think we don't need to make any changes. We are fully compliant. Well, from the work streams I've been on at Key, yeah, I think that's slightly nerve-wracking to be honest, that people are saying that. So I think what's the important message that I want to get across, there's a lot of people in this audience today who are specialist equity release advisors. And I think that's the thing for me, is if you're not going to be a specialist in this market, you need to look at a strong referral partner, a partner that's got heritage in this market, that's trusted, that's got experience, that's a really simple process for you, because it's not going to be necessarily your mainstream of marketing. Got to be collaborative. And that's what we offer at Key Partnerships. And I'm sure that's what you offer to your referral partners as well. But I think for me, it's a really interesting market, and one from a referral perspective that's going to grow, because people are going to make decisions based on consumer duty, and also based on the fact that the regulator is saying use it or lose it. So I think, over the next year or two, we'll see some real change. But what I'd like to say at the end, because I think I'm just about out of time, I'll probably run over because I normally do. I'd just like to say it's really good to see you all today. Thank you for your time today, and good luck, for these choppy waters that we're in. But just remember, your customers need your help. So for me, that's the most important element. People still need help with rates or whatever. They'll need your help. So advice that you're giving, delivering every day is required. Thank you for your time. Enjoy the rest of the day.
Thank you, Jason. It's interesting, I was on a working group the other week that we were talking about PI insurance in the directly authorised market. And there's some issues around PI insurance. Those of you who are DAs may know that the PI insurers are starting to review what they're charging, what they're covering for, what risks they're willing to take, and what risks they're not willing to take. What was interesting was the debate about how premiums are massively increasing. The reason for that is actually, if you break that down, it's the smaller, very low producing advisors who are directly authorised that are getting caught, where PI insurers are not so much increasing the cost of risk, they're increasing their minimum premiums. So whereas before they might happily take on an advisor with a premium of a couple of £100 a year, they're now saying it's just not worth it, because one claim that's successfully landed is going to obliterate hundreds of premiums collectively put together. So for us as an insurer, we're now not going to quote for anything less than £1,000, £2,000, £3,000 a year. You might think, how is that relevant to what we've just heard? The relevance is that a lot of people who are currently, and I hate the phrase because I've defended it very strongly for a number of years, but advisors who are dabbling and doing one or two cases a year, if they're not in a network that will allow them to transact business in this sector, they are going to get forced out by their PI insurers. So just be aware that there will be new introducers coming onto the market who might currently be writing a handful of cases, who will start looking for referral partners. So as I say, AIR is looking at a much bigger, broader referral proposition, which isn't for discussion today, but will be fed out to members in 2023 and beyond. Okay, we're going to have a break for 15 minutes. So if we aim to be back here for 11, that'd be great. So is the refreshments downstairs, Stu? Yeah, back downstairs. We'll see you at 11 o'clock.